You made $1 million. How much of that million actually ends up in your pocket? Let's just say in this country currently you have an employee and they make $1 million in salary per year, okay? Now if you're making $1 million a year, and if you're in California, you're paying 13, and my numbers might be a little bit off, but you're paying 13.3% in state income taxes, and you're paying 36%, it's at 36.9, I believe, in federal taxes. Okay, these are real numbers. I might be off by a few digits here or there, but for the most part, that's what the taxes look like. So 37 plus 13, what are we at? 50%. So you made $1 million. How much of that million actually ends up in your pocket? Half of that. So you pay Uncle Joe, which is your taxes, and you are left with really $500,000. So you just paid 50% of premium on your money, okay? Now let's just say you want to buy a car. You want to buy a $100,000 car. Well, let me ask you guys something. If you want to buy a $100,000 car and you're paying 50% in taxes, how much are you actually buying that car for? Yeah, you're paying a lot more than $100,000, right? Because in order for you to pay after taxes $100,000, you need to have more than $100,000 because the $100,000 needs to be in your pocket. Does that make sense? Post-tax, yes. So really, you're making $200,000 in order to buy that $100,000 car. So your $100,000 car just became $200,000. Stay with me. This is important for you to understand tax-wise. Now, you paid off your $100,000. You pay off your, let's just say, mortgage, racks up to maybe another $50,000 a year, so on and so on and so on. And at the end of the year, you have used up all your income for your expenses. And you're left with zero. Very well paid, but you just missed out on half of it. If you're making $1 million as an employee, it's still not a bad gig, right? Not a bad gig. Problem is here, if John Smith wants to take out his wife on a dinner date, he has to pay after taxes. If he wants to take out his colleagues, that money comes after taxes. It's post-premium that you paid on your own money. Now, as a business owner, let's talk about the business owner that makes the exact same dollar amount, $1 million. Let me ask you guys something. When a business makes $1 million, do they get taxed right away? Nope. No, because you know what's the first thing they do when they look at my books? All right, what's the business expenses? Oh, Farid went out to a restaurant with his friends? All right, well, that restaurant comes out of the business. Oh, Farid's going to Havasu with these guys? Okay, that trip needs to come out from his business, right? Oh, he wants to buy a bunch of assets, merchandise. He wants to buy his guys a whole new suit after the March Madness competition. Okay, expense. He wants to buy a car over 6,000 pounds. By the way, G-Wagon, everybody likes my car, yeah. It's over 6,000 pounds. Technically, I'm on camera, so I'm not gonna say anything, but. It's an over $6,000 car. If it's your second car, it can technically be owned by the business, right? That $250,000 car is actually $250 on this side, not $500,000 on this side. So on and so on. My phone bill, a part of my mortgage, since on Saturdays and Sundays we work on Zoom and I'm technically working at home, and for some reason my business pays for my mortgage too, part of it at least. My phone, since I call you guys, it gets paid by the business. After this, I'm probably gonna go pick up a few more suits, and that's gonna be paid by the business and paid by the business, paid by the business. And then at the end of the year, the IRS is gonna look at my business and be like, oh, this business made $0. After all the expenses have been paid, they only have $0 left in their account. Because by the way, at the end of the year, whatever profits are left, then I take it as a distribution, and my business has $0 left. And my $1 million was spent as $1 million, not $500,000. Do you guys see the difference now? By the way, this is, just so you guys know, you can do a little bit more studies in this. This is how the rich get richer. There's loopholes, and it's for everybody. It's not just for me, it's for everybody that wants to take advantage of that. Let me actually tell you guys something else. This all looks really sexy. Let me paint the unsexy side of this. What if this business makes only $100,000 just to keep it afloat and expenses and whatsoever? You have to put salaries, you name it, whatever. I have to pay $90,000, right? And then there's only 10,000 left. What's my salary for the year? 10,000, right? It's what you make of it. The same structure is going to be available to every single person. It's what you make of it. Yes, this has really cool loopholes. It's what you make of it. If the performance is up, well, guess what? That number is up. If the performance is down, this number is down. As long as you put in the time, it doesn't matter how hard you worked, or maybe there were some days where you were like, I'm not really feeling it, and you didn't put in that much effort. You know you didn't do it. Are you still getting paid the same amount, right? So is there, I'll use this word, is there an illusion of safety in here, right? Why am I saying illusion? Inflation is up, interest rates are up, unemployment rates are, you guys all know across the country, if you guys are paying attention, are up. A lot of very well-paid employees that possibly were getting maybe half of that, all just got cut. Before they got cut, do you think they were safe and sound? Yeah, absolutely. But here, you cannot bet on yourself. Here, you can bet on yourself. As long as I work my butt off, I'm going to stay afloat and I'm going to make more and more and more. That's the reason why I picked this route, because I'm willing to bet on myself rather than a company or somebody else to dictate my future or my safety. I want to be the one that dictates it, which is a pretty hefty role, because if you think about this, if you're not willing to bet on yourself, bet on your performance, bet on your work ethic, bet on the fact that you're going to have a better mindset next year than this year, well, hey, listen, maybe pick this route. But if you're like, hey, I'm constantly increasing my value, why should I get paid less? If my value next year is $3 million, why shouldn't I get the whole $3 million? I'm willing to bet on myself. By the way, this guy right here works his tail off. At the end of the year, how much raise is he going to get? 3 to 5% maybe, salary raise. If I work my tail off in here, how much am I going to get? Whatever I put in. I dictate my own raises.